And that is U.S.-China trade tensions. They are rising. President Trump on the campaign trail highlighting why he's taking such a tough stance against China, especially ahead of the meeting this week with Xi Jinping.
We racked up $4.5 trillion in trade deficits with China since they entered the WTO, that's the World Trade Organization, which, other than NAFTA, is probably the worst trade deal any country has ever entered. And we entered it, and that's what built China into the power. But now we're the big power. We're far more powerful, and that's the way we're going to keep it.
And in an interview with the Wall Street Journal, the president said that he expects to levy additional tariffs on Chinese imports that could hit Apple products as well as others. The stock is sliding on that news. Joining us right now is the Coming Collapse of China author, Gordon Chang, expert on China-U.S. relations. Gordon, it's good to see you again.
Thank you so much,
Thank you so much for joining us. The impact of this further $267 billion in tariffs that the president says, yeah, they're probably coming. What's the impact?
Well, the impact is going to certainly hurt U.S. consumers because these are not going to be as targeted as the first $250 billion. But the point is the Chinese are probably not going to cave in on this because Xi Jinping, the Chinese ruler, now has all the incentives in the world to take China off the cliff with him. So I think we'll probably have to go to different measures to protect our IP, and that's probably going to be bans on imports of products that have benefited from intellectual property theft.
So, do you see these tariffs coming off at any time in the Trump presidency? Do you think there's any room for an agreement between the United States on China that would put this administration in the position of saying, okay, we're comfortable with what you're offering the Chinese?
You know, there's always the possibility of a deal, but I don't think Beijing will honor one. You know, we saw that with the 2015 cyber agreement between Xi Jinping and President Obama in the Rose Garden, where they both promised not to hack the companies of the other country for commercial purposes. Well, China never stopped hacking our companies. And so, you know, this is so built into the Chinese system, especially under Xi Jinping's idea of a state-dominated economy. You saw, you know, Alibaba's chairman or former chairman, Jack Ma, Communist Party member. That shouldn't be a surprise to anybody who knows anything about China right now because Xi Jinping has been trying to control private businesses.
But if there is a fixation, though, by President Trump on the trade deficit with China, is that really his goal, is to stop the theft of intellectual property, to stop the forced surrender of technology, to stop the corporate and broad espionage by China? Because he's fixated on the trade deficit. He clearly likes using tariffs, pushed on by Bob Lighthizer and Peter Navarro and even Wilbur Ross to a lesser extent. He likes slapping tariffs on because he sees our trade deficit as a debt, which it's not, but that's how he clearly sees it.
But also because I don't know that he sees another way to change China's behavior. I mean,
right. I mean, right now, you have to impose severe costs on China, and those costs are going to be more severe than we contemplate right now because of just the internal dynamics inside of Beijing.
But what about taking this question? Is that the right answer? Is it tariffs because that's the goal, right? Get them to stop stealing our IP, get them to stop forcing the transfer of technology, get them to open up markets in China for American business.
Yeah, I don't think tariffs are going to do it. Certainly at the 25% level, they're not going to be sufficient. You know, what we're really going to need to do is disentangle the U.S. and Chinese economies, basically to stop IP theft.
That's not going to be good for American business.
These are the two largest economies.
That's not going to be good for American business.
Every American multinational
every business wants in there.
chain.
It's already happening because supply chains are leaving China for a number of reasons. And, you know, a number of people who are suppliers to the big box stores have been actually saying in the last couple of days they're looking to see what Xi Jinping and President Trump do. Because if there's a hint of a deal, they will stay in China. But if there's a feeling that there won't be a deal, then there's going to be a number of companies, especially at the lower end, moving out of China into other countries. You know, that process has already started, but it's going to accelerate with this. And so we will see a disentangling of the two economies.
Well, what is the probability of us getting a deal or a de-escalation either at the end of this week or by the end of this year before those tariffs do go from 10% to 25%? Because you see the market last night when Trump made his remarks barely reacted to it. And, I think the market is now thinking maybe he's just negotiating in the public.
Right.
And once he gets face-to-face, one-on-one with him behind closed doors, maybe he'll change his tone a little bit with China.
I've heard every conceivable opinion at least 2 or 3 times. So, I don't know what is President Trump's mind. And to Dagan, I don't know what he's really fixated on. Only he will be able to tell you.
He told us at the Wall Street Journal yesterday that he's going to higher tariffs. So
the point, though, is that even if you have a deal with China, China will not honor it, which means we're going to get to a point where there'll be more stalling, more delay, more stealing of U.S. IP, and essentially we're going to continue to bleed. So I think that at some point we are going to get to a point where we're going to say, no, we've got to disentangle the 2 economies. Well, we've got to start putting in higher and stiffer penalties.
You're dealing with a dictator for life. How about this story that we covered at the end of last week or earlier this week? Beijing to judge every resident based on behavior by the end of 2020. So they've got this capital plan social credit system by the end of 2020. They're watching everything you do. If you smoke, if you do something that they don't like, then you won't be able to get a train ticket. You won't be able to get on a plane to leave and to go anywhere. I mean, this is China.
You won't be able to put your kid into school. You won't get government benefits. As they say,
anybody with poor scores will be unable to move a step, apparently.
That's right. And that is almost literal what they plan to do. Not quite, but it's very close. This is a country moving in all the wrong directions because Xi Jinping believes in as a state-dominated economy, state-dominated society. Party controls everything. He controls the party. China's moving in all the wrong directions, and you see it from the detention of the Uyghurs, which is a crime against humanity. You see it with gene editing. We're going to have a breed of superhuman Chinese.
Yeah.
This is really scary stuff.
Meantime, they're the largest holder of our debt. Large foreign holder. That has to matter at some point.
But that doesn't matter because the Chinese have been selling our debt. They've sold about $1 trillion of it since the middle of 2014 because their biggest problem is capital flight.
Yeah.
If they don't support the renminbi, it's lights out for Beijing.
Real quick, we got to jump. But is the bigger threat economic or military? Because I know that China is using its economic power to build up its military power in the South China Sea and all over the world, actually.
Yeah, it's really hard to answer the question, but I think economics is really the core of this because they're building up their military with the profits from the sale of goods to the rest of the world, especially the U.S. So I would focus on economics.
All right, we will leave it there. That's what the president's doing, I guess. Gordon, it's good to see you.
Thanks, Maria.
Thank you so much. Gordon Chang joining us there.